And hello, everybody. Sorry we missed last week. As many of you know, we are also a tax investment firm. So we have been swamped taking care of our clients' taxes. But let's get into the market updates. Starting with the S&P 500, as we'll talk about the war with Iran, but the war with Iran is what's causing us problems. But I want to point out a couple of things that I hope we've pointed out in some previous videos, but we had a clear separation right here where the 8-day moving average started to move below the 18. It had a slight chance to get back above it, but it didn't hold. And we've been in a sell-off, and obviously the war kicked in, and everything has happened from there. Last month, I talk about these target dates. It actually hit last month's target, tried to rally above it, and broke down again, and really was a disaster, all things considered. I actually think that we're going to even go lower from here. I know nobody wants to hear that, but I could see us going down to 6,000. For some reason, 58.35 is a number I think we might actually touch. So what can I say? Yes, it looks like we've got some turnaround in our moving averages, but right now the market's down in here this morning. So it's down into the 100 points. And I think we could definitely retest this 63.16. And I don't know of any of those supports down there that I can see in the short term. I'll check some other charts out. Maybe I'll have something for you next week. But all in all, I just think it's bad. If you're not in the market right now, I would still wait to get in the market. You do what you want. I'm not giving you any advice. I'm waiting for cheaper prices. I think they're going to get cheaper. I think there's still a good buy. Now, again, time horizon is something we talk about a lot. If you're thinking I'm going to buy now because I think the SPX is going to be at 8,000 next year, well then, do what you think is right. But time horizon is always very important. Let's get to our next slide. One second out of this one. We use the diamonds for the Dow, same representation. And as far as stuff to point out, guys, it's almost a mirror image of the other charts that we looked at. Once you have this breakdown right here where the 8-day is coming down below the 18-day, to me, guys, that's a great time to be out of the market. Or if you want to play the downside, that's definitely your thing. We've had a great pullback. Again, will we come back down to this 4,500? I think we'll actually go lower. So I still think there's some excellent opportunities to buy in the future. I don't have my target dates on the diamond for last month. I apologize. Normally just buying outside of this standard deviation channel in of itself is a great move, but just not right now. It is a tough one to buy. We're definitely below our yearly and openings for sure. It's just a disaster. So, here's our opening print right here. So we're way below the open. So if you think that the market's going to be positive this year, you've got, let's see, 481 to 460. You got about a 21 point, and it's down this morning. So you've got about $30 of upside before we even get profitable. So if you think the S&P even could go back to its high of 505, you've got some pretty good opportunity to make some money on a move on the diamonds. Again, I wouldn't buy today. This is this morning right here. We're already opening up to the downside. It's Thursday morning. We're already up on the downside. Again, let's see if we can hold at this 450 mark if we can and get a bounce, because it's going to have to hit it. Now, obviously, you can see it hit it here twice within maybe within a dollar of each other. You can see both those wicks down there. We could get supported. If we don't, it breaks down and it goes lower for sure. That's my opinion. Let's get out of here and keep moving on. So economic reports. Obviously, we had retail sales up. ISM is still expanding, which is the businesses, and they're expanding their production, which is a great thing today. A big thing, initial job claims. Why do we care about initial job claims? Again, initial job claims, if it's going down, people are working, they're getting new jobs. We know IT. AI is taking jobs away. So seeing jobs decrease shows that we still have a very strong and vibrant economy. I do believe I heard this morning that the unemployment is still at 4.4%. That's not really a real shocker. I don't think it's going to drop just because job claims came in 10,000 under estimates or 15,000 under estimates. That's not really enough. But it is dropping the prior over here. Let me go circle that. It's about 10,000 jobs, 9,000 jobs less. Depends on how they did the rounding. That's a good thing to see. Continuing claims has gone up just a hair. That's the number I like to watch, but overall it's been declining. It is up 30,000, which is fairly almost 30,000, which is 25,000 looks like, which is a pretty good chunk, of people without jobs this week and going into the Easter holiday. But at least it's not back up to the $2 million people mark, which is where I really start to pay a lot more attention. I think over 2 million, you have real problems starting to brew. But as long as this is on a basic downtrend, I think that's all great stuff. Trade balance, as you can see here, went unfavorable again, down from the estimate 7 billion. From the prior one, we're 3 billion upside down, give or take a couple hundred million. I know that sounds like not a lot of money when I say that, but we all know it is. But all in all, um, trade balance is not drastically improving. Probably should look at a chart more so over the last few years or for the year and see if it's still decreasing. That'll tell us how much impact the tariffs are having on our trade balance. Okay, well, that's all I got for this week. Don't have any stock tips. My stock tip right now is I am not adding any new positions and don't see me any new positions anytime soon. I hope you guys are all doing well otherwise, and a very happy Easter to all of you.